Toronto's home sales just crashed 28.5%. Vancouver's inventory is surging and consumer confidence is plummeting. So what's really happening in Canada's housing market? With trade wars escalating and rates possibly dropping below 3% by mid-2025, is this a golden opportunity for buyers? Or is there more trouble ahead? In this video, I'm going to break down the latest trends across Canada, where the market is cooling, where it's heating up, and how you can make the smartest real estate moves this year. Stick around to the end because I'll explain exactly what this all means for you. Real quick, for those who don't know me, my name is Richard. I'm a real estate agent passionate about keeping Canadians informed about what is actually happening in the housing market. So naturally, this channel is all about Canadian real estate. And if you like that and you want to stay up to date, give this video a like and subscribe to the channel. Before we jump into the housing market, we need to talk about the bigger picture, because right now the economy is serving up a whole lot of uncertainty. And if you've been following the news, you probably heard about the US announcing major tariffs. The market's freaked out, stocks plummet, investors just scramble for safer assets. And people are starting to ask, wait, are these tariffs actually happening now? Because they've been back and forth quite a bit now. Turns out even Washington isn't sure. Some of the officials are already backtracking, saying these tariffs may not be permanent. But here's the problem. Uncertainty kills confidence. Businesses don't want to invest, and consumers don't want to spend when they don't know what's coming next. And that especially includes big ticket purchases like homes. So let's just talk about consumer confidence, because it took a huge hit in February. The Consumer Confidence Index dropped 12 points, making it the third lowest reading on record. 1/3 of Canadians now say their financial situation is getting worse, and 62.6% believe it's a bad time to make major purchases, including a home. Basically, buyers are nervous right now, and they have good reason to be. And when people feel uneasy about their finances, they just tend to hit the brakes on any big decisions, like moving, upgrading, or even just entering into the housing market for the first time. With fewer confident buyers out there, we're already seeing softer demand and slower sales, especially in cities like Toronto or Vancouver, but more on that in a minute. But there's a silver lining, as always. If there's one thing uncertainty is good for, it's lower interest rates. With all this economic chaos, bond yields have dropped hard over the last 2 weeks. Why does this matter? Because fixed rates are directly tied to bond yields. The 5-year bond yield, which banks use to set mortgage rates, has tumbled. And the consensus being that there is a high chance that the Bank of Canada cuts rates in March, and then another cut is likely going to be happening in April. If this plays out the way experts are predicting, we could see insured mortgage rates drop to 2.99% this summer, maybe even high 2s in some cases. And that's huge, because these lower rates could be exactly what these hesitant buyers need to jump back into the market. But here's the big question. Will cheaper borrowing costs be enough to bring buyers back? Because right now, consumer confidence is low, inventory is rising, and prices are slipping in some markets. So while lower rates might help, it's not a magic fix. Now that we have a better idea of what's happening in a more national level, up next I'll be breaking down exactly how this uncertainty is playing out in Toronto, Vancouver, and Alberta. Now let's talk about Canada's biggest real estate market, Toronto. And it's not looking pretty. If you thought the market was starting to stabilize, you might be in for a bit of a surprise. Toronto just posted its worst sales drop in decades. The home sales crashed 28.5% in February. In the suburbs, sales have dropped more than 30%. And this slowdown hit every segment, from condos to single-family homes. And the question is why? Well, it's kind of a mix of things. Economic uncertainty, they had bad weather there not so long ago, and buyers are stepping back just to see where things are headed. New listings fell 21% month over month, which might sound good on the surface, but inventory still hit its highest February level since 2009. What's even more shocking is that there are 117% more detached home listings in the city than a year ago. And that's a massive shift. And this shouldn't come as a surprise. We knew this was coming. With fewer buyers and just more homes sitting on the market, prices are starting to trend down. The MLS Home Price Index dropped 1.5% in February. That means some of the official price growth we saw earlier this year might have been overstated. And what's next, you might ask? With mortgage rates likely dropping soon, some buyers might come back into the market. But for now, Toronto is shifting into a buyer's market. If you're selling, be ready for longer wait times and price negotiations. Enough with Toronto. Let's head west to Vancouver, where things aren't looking much better. Because Toronto isn't the only market cooling off. Vancouver is also seeing sharp drop in sales, while inventory is piling up. Seasonally adjusted home sales dropped 20% in February, the biggest drop since May of 2022. Detached home sales were hit the hardest, with demand well below historical norms, with new listings rising 11% year over year and condos saw the biggest jump. And as you can see in the next graph, that pushed the sales to new listings ratio down to just 37%. And active listings are up 32%, reaching levels not seen in nearly a decade. Condo inventory is 40% higher than last year. Buyers now have more choices, which means more negotiating power. And now we are seeing prices starting to slip. The MLS Home Price Index dipped 0.3% last month, which isn't a huge drop, but definitely a change in momentum. It appears that mortgage delinquencies are creeping up as well, which could result in more forced sales in the months ahead. And so what's next, you ask? With more homes on the market and fewer buyers just making moves, Vancouver is shifting even more in favor of buyers. If you're looking to buy, you're definitely going to be having some leverage when it comes to negotiations. And if you're selling, be prepared to adjust your expectations. Unlike Toronto and Vancouver, Alberta is a different story, where Edmonton seems to be still chugging along. Prices are up 12% year over year, one of the strongest gains in the country. Why? Because inventory is still super low, which is keeping competition fierce. The sales to new listing ratio is hovering around 80%, meaning most homes are still selling quickly. And then we have Calgary on the other hand, which is cooling off. Seasonally adjusted sales fell 15% in February, the biggest drop since March of 2022. Prices have flattened out, ending a long streak of gains. Inventory is building and the market is returning to normal levels. The big question is, what's driving this divide? Edmonton has way less housing supply, so it's keeping demand strong. Calgary, on the other hand, has more homes under construction, which is giving buyers more options. But now, as promised, what does this all mean for you? And so for buyers, I'll start with you first. If you've been waiting for prices to soften, Toronto and Vancouver are shifting in your favor. With inventory levels rising and buyer confidence at a low, sellers are more willing to negotiate, especially in the condo market where supply is piling up. If mortgage rates do drop as expected, demand could pick up later this year. And so acting before this competition returns could be a smart move. And if you're eyeing Edmonton up, this is kind of an interesting spot because inventory is still tight and prices are climbing. But with more uncertainty on the rise, that could definitely change here. Though Edmonton is one of the few markets still seeing a strong price growth. With low supply and an 80% sales to new listing ratio, in my opinion, buyers may not have much room for negotiation. If demand remains strong and inventory stays low, prices could continue to rise, making homes more expensive later in 2025. But if you're buying in Calgary, this market is stabilizing, giving you more time and options. Unlike last year's red-hot conditions, sales are slowing, inventory levels are creeping back towards normal. The market isn't weak, but it's no longer heavily favored for sellers. Buyers now have a chance to shop around and negotiate, especially in the single-family home segment. And for sellers, these are my thoughts. In Toronto and Vancouver, price cuts are going to be becoming more common, so just be prepared to negotiate. With more homes on the market, you as a seller are losing leverage. If you're one of those people that needs to sell ASAP, pricing competitively from the start is going to be able to help you avoid those price reductions down the road. Proper staging, flexible closing terms, and targeted marketing will also be a key in attracting serious buyers. And then Edmonton sellers still have the upper hand, while Calgary sellers might see more competition. Edmonton's low inventory and higher demand means well-priced homes are still selling quickly. And sellers can afford to be firm on pricing, but as mortgage rates drop, competition from new listings could increase later this year. Meanwhile, Calgary's market is stabilizing, meaning buyers have more choices. So if you're selling in Calgary, just expect longer sell times and potentially price adjustments. The bottom line is, if you're a buyer, I see opportunities emerging in Toronto and Vancouver, especially if listings continue to rise and interest rates come down. And sellers, you need to be realistic about pricing and just be prepared to negotiate, especially in those cooling markets. All that to say, the real estate market is constantly evolving, and the key to making smart decisions is understanding the data. If you found this update helpful, make sure to hit the like button and subscribe so you just don't miss out on next month's report. And if you want to see how this month's compares to last month's, where I break down the key trends that are still shaping the market today, I'll link that video right here. And while you watch that, I'm gonna go fly some drones.